Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today's agenda, we'll go through a market update. We'll go and look at some of the earnings trades that have popped through. Joe's going to throw some charts up at you. And I think that's it for today. So hopefully we had you guys enjoyed the show coming on last week. I thought it was very formative to go through those married puts. We're also going to be tracking that portfolio. So I'll show you guys that. Just on a side note, in case you didn't know, Joe lives up in Philly, and he went to the World Series game one, first game in Philly last night. So I don't know if anyone watched it, but he can fill you guys in on what happened there. I watched part of the game and pretty cool. So very electric. Anyway, we'll let him talk about that in the road here. So let's just go through the market. You can see here we had a couple transitions. So Russell was first one into 7, SPX followed, NASDAQ still 8. Green pie wise, you can see got all the way up to 57 as of yesterday. And I think we talked about that last week. I'm like, there's pretty much nothing holding it back to get into that level. So definitely not oversold anymore. And we'll go into that kind of analysis. A lot more of the sectors have gone into 7. This one I just saw healthcare went into 5. So, that's kind of a big thing, like when we get these 7s popping from the bottom, the next thing you kind of want to watch is the 5s, and I'll show you that in the market pulse here. So, bullish bearish first. So, last week I was pretty much, didn't see any reason it wouldn't get to 50. So it has crossed over, obviously, our Wednesday meetings are well timed with these inflection points for the Fed and stuff. So, I think a lot's going to depend on what comes out of not so much, the rate hike, but the talk after, seeing what we get out of Jerome. So, we crossed over. And we've had quite a few of those. This one didn't get up there. This one crossed, turned over. This one crossed. It had a pretty good run after. And, we'll have to see what happens here. So obviously, say my guess would be similar to like this rather than continued run, but it's really dependent on what comes out of the Fed. Because the last thing before the Fed went quiet, was talking about like a pivot type language come from like a leak. So I don't put too much credence in that, but we'll have to see what comes out of there. Let's see here. Nothing going on here. Pretty much, no, barely any highs, barely any lows. So, we're back in dwell time, which seems to be, our bullish runs. We get these dwells where things have flatlined, both of them, and things kind of run up, and then, volatility resumes. So we'll have to see. Really, I think a lot's dependent on the Fed. Let's look at the individual states. All right, so what I wanted to pull up, obviously the 8s have dropped down a lot here. What I want to kind of show you, it's like kind of like the next tier analysis. So the top one here is the 7s. So you can see the 7s really spiked, kind of in the neighborhood of where we are now, 20 something, 30. This one got up real high in the 40s. But I think the secondary thing you kind of want to watch is that state 5s. You can see this first one The fives never really responded. And, when the sevens were spiking. So what you really want to see is, sevens going to five, for like a continued rally. So here we didn't get that really at all. And then, once the eights kind of turned around, that was like your sign. Here, we got good spikes and then, kind of follow through with the fives as we continued up. Once the eights bottomed, then everything rolled over. So you had a little time here, to position yourself once that eight kind of turned and everything else, started turning south for the bullish, the five and the seven. But you can see that five follow through on the sevens, they start moving to five. Obviously, that was a great run there. So here, we're just kind of at the beginning. We're getting a little movement in the fives, which would be bullish. But, we'd need to watch, sustained movement on those. And then, obviously watch the eight also, for any kind of, flatlining here or a U-turn. So that's kind of the, next level analysis, I would say, is pretty important to watch over the next, week or so. Just watching those fives. And then obviously, the eights and sevens, but, kind of keep an eye, like, okay, is it building each day? Then we can, continue the run, so that was it on Market Pulse. Nothing going on in the lows. So let's take a look at SPX. So this went into state 7 on Friday. On average, we get 3.5% move. Obviously hasn't been good. Pretty much finding real problems at the entry price here, 3,900. Typically we'll kind of run up here, down, and then up, and then, one of two options really happens, either higher or lower, for the average move. Excuse me. But obviously a bad start. I think we're even down more today. So, not a good start here. Obviously, you can look at the stop loss levels. Really the thing kind of key on there's, 3,800. That's the low end of the range that we're in right now. And I'll pull it up on the big chart here. We had a little push above, that 3,800. That's also right in the area of the 50-day EMA. Obviously, this is, the important one at 200. So that's right around 4,100. The other end of this range that it's currently in is at 4,200. So, we're just peaking above, this 3,800 here and kind of having some problems, as you can see over here. So, something to watch for. I don't know. Let me see where we're at currently. Yeah, so we're right above 38. So, that's kind of a key level. You can see back here. My tool. Yeah, we had some problems here. Last time it kind of breached there. So now we're a little bit higher, but, we could easily swap, back down into the 38 to 34 range, depending on obviously what happens. I think a lot of things are going to be driven by Fed language in their talk here. So that's SPX. So let me pull it out. Just kind of big picture wise. And we talk about this a lot. Until the Fed changes course, I just think this is kind of like the line in the sand. This is right around that 200-day EMA, 4,100, just call it. So, I think until, they say don't fight the Fed. So, as long as they're, on the same course, I would think this line would be very tough to breach. So let's look at the Russell. Russell obviously doing better. This came in on what day was that? Thursday, so the day before. SPX entered, had a nice little bump, doing kind of the average kind of move type thing so far. But I think kind of the key levels here, we're right in the middle of the range. So the top is 19 for the current range, and then the bottom 17. So right above, pretty much, this whole state 7 is pretty much, right inside our range here. So pretty much right at the middle, little above middle, but yeah, so I don't think there's much else on this. Next state, sorry, next state. So, this is since 07, but, about, 30% of the time it'll drop back into 8. Let me pull up the SPX one too. Yeah, so about the same ratio, about 30%, and that's a very bullish market. So, let's look back here. Yeah, last time you can see here, I mean, since January, end of January, we've been in the 8.7, 8.7, 8.7, hit the 5, then back to 8.7. So this one's pretty much been in the classic death spiral type of thing, but it's had a floor, a really hard floor, to break through down here. And we'll look at that on the chart. So chart wise, so we got, current range 17 to 19. Oh, sorry. So there's 17. So it's had a real problem staying below that 17. And, it's broken above 19 before. Excuse me. Excuse me. It's broken above the 19 before. But, the other thing is, okay, there's the 200. So we had another 200 up here. This one didn't really get near the 200. So we're pretty close to the 200 here, which will be pretty strong resistance overall. So I think it'd be tough, same thing with SPX. I mean, to break above here, unless Fed really is going to change their tune, and I think that could be, a number of things, slowing down the rates, any kind of language like they think inflation is getting better. I don't see how they do that with, things that have come out, readings, but, things like that would be, very bullish, but, until then, it's just going to be hard for the market to break above, kind of these key levels. So, still in 19 to 17 range. If it breaks below, kind of this level, that 17, I think that'll be signs things are going to get ugly, obviously. So we're in a good range, right? Been holding in there quite a bit. So,
say, Josh.
Yep.
This is Dave. Could I ask a quick question while you just have the Russell up compared to the SPX? Kind of first question is a question for you and Joe. If it looks like the Russell's faring a little bit better than the S&P, and my question about that is, do you think that might be due to the price of the dollar, the strength of the dollar being a little more impactful to the S&P 500, which have more of a global sales kind of issue? So that's one question. And then this almost looks like it's very possibly going to be a head and shoulders kind of thing with about a 3-month, June, July, August, 2.5, 3 month kind of like build up, especially if we get a more higher inflation push out from the Fed and higher interest rates.
Mm-hmm. Yeah, I think that's a factor, the strength of the dollar. a lot of the smaller companies are not multinational, so, they're not seeing these huge headwinds from currency. So yeah, that could be a factor. This one went down first, it led the way down, and then now we found a really hard bottom to break through, for this one. So, this one didn't really make new lows from June to here. I mean, pretty much same level, whereas SPX did make new lows. Not significant, but pretty good. So there, I just think this one's kind of led the way down. I think there are obviously a lot of factors, but inflation, I mean, the dollar strength is definitely one of them, for how they affect, the multinationals versus, small, in US companies. Joe, did you have
Josh,
any?
I would just,
Mhm.
I would just add, yeah, agree on the dollar front, Dave and Josh. And yeah, to your point, Dave, from the low, you got a 14-point run up so far in the Russell versus the 12% on the S&P. So yeah, it seems to be leading the charge, and part of the reason maybe is to suggest that dollar. I honestly don't see the head and shoulders here, Dave, but that's just me.
It's kind of like shoulders with
Yeah, like you just said, and I think that I'm anticipating the shoulder to the right, just being that I think it's kind of like another false rally here in a bear market that
Mhm.
in about an hour and 15 minutes, the Fed's going to address pretty radical, one way or the other. We'll see.
Right.
Yeah. One thing about the head and shoulders, oftentimes I see the right shoulder a little bit higher than the left, and typically you get a trend line off those bottoms, that's pointing up a little bit. But yeah, we'll see. And I think, by tomorrow's close, that's really, what I'm looking for in terms of timing short term in the market to get, any sort of hint as to the true direction.
Right.
I really think we need the market to take things in and see where we close, tomorrow.
Yeah, I agree. I mean, we could get, you get these funky Fed day here, the next is up big, and then next day down big, and then like boom, like things sink in. So, what happens after that? Today, I think Joe's right on. Look tomorrow to see what direction we're really going.
Yeah, that right shoulder is like not happened yet, but I see it kind of getting to be at top of today maybe. And I was wondering if I could ask this question to the group while you're, and I won't interrupt you again, promise. For the December 5th meeting, I mean, the current rally is predicated on a pullback on December 15th being somewhat less than 75 bips, like 50 or 25. In the chat window, I wonder if everybody could put in their December guess at the Fed rate hike while they're listening to the rest of your presentation. I'll do the same, but I think that might be fun.
Okay. Yeah. We can
Thanks.
do that. Okay. My guess is 50 for December, but
I'm guessing 75 again, but we'll.
oh wow.
Ooh, oh, okay.
Aggressive, Dave. So okay. Let's go into our other, speaking of the Fed, 88% for 75 BIP hike. I read somewhere that anytime it's over 80, they've never disappointed, for expectations. So I think it's pretty much baked in for 75. Anything else would be very shocking to the market. We got some, okay, we're between 50 and 75. So I'll pull up December market expectations right now. So this would be 25, this would be 50, and this would be 75. So pretty much, it's polling the same as our little chat box here. About half and half-ish. So, yeah, I think it's really, depending on what comes out, and data-wise and from the Fed today. I'm not going to keep harping on that, but let's look at our favorite little Fed chart. So we have moved down some more, another 20 billion. So they're actually pulling it off. So we're below entry for the year. So we're actually down on Fed assets as far as we know, this report. So 1 year we would have to drop, another 200 billion to get down there, but they're moving. Not as fast as people, I think, expected. We were at 2.5% from the top last week, so pretty much same area. So we'll just continue to monitor that. Did want to pull up something as far as rates. So you can see, here's our 10-year. You can see pretty much everything is inverted. Down to the 3 months. The 1 month is not inverted yet. But it could be, depending on how things go in the next month or two. But surprised we didn't get any kind of more run up here. But all the other rates, I mean, you can get a 1 year treasury bill for almost 4.7. So big inversions. Our 210 that we were looking at before, it was around like 0.3. Now it's like 0.5, over 0.5. So it's inverted more from when we pulled up those charts a while ago. So, that's usually a recession indicator, when everything's inverting. I did want to pull up the chart. So this one doesn't look good, but when I pulled off this year ago, this really shows you the inversion. So you can see very inverted, outside of the 1 month, but there's your 3 month and then your 10-year. Who's going to buy a 30-year at this point when you get 3 months? I don't know. So just wanted to pull that up. What other things? So I was just thinking and talking with Joe, besides Fed and all that and inflation, there is quite a bit going on over war type things over in Ukraine. I saw a report that the 101st Airborne was deployed. They're right off the coast of right off the border of Ukraine. So they're in Romania, a few miles away. And then I saw another report today that there's actually U.S. troops, boots on ground in Ukraine. So that's big escalations. Actually pretty concerned about what's going on over there, and it seems like they're trying to provoke some kind of confrontation between NATO and Russia. So, I mean, that could be another thing. Obviously, my background is military. I've been to war college. So, I have a little more knowledge than most people on this, but, I'm pretty concerned about, what's actually going on over there. So that could be another, obviously that would be a huge shock to the system, if we go to a big war. So, all right. Oh, the NDX, almost forgot. We talked about this for a couple weeks. So I pulled up the 1 week chart. So you can see last week, we popped above. Now we're back below. I don't think that's a good sign. So, we're right, fighting this thing. Obviously, the other times it just swooped right through, and made huge moves the last 2 times. But, we're right, so we're battling here. We came below, pop up above. I don't think it's a good sign that we're back below. Let's see how, you know, the market moves here, but you know, this is driven a lot by you know, couple like Google, you know, Facebook, you know, Amazon, they're all getting kind of crushed. I mean, just pull up like the Facebook chart, Meta, whatever. I mean, this thing's getting, you know, 376 to sub, you know, under 100. So these things are, you know, definitely not doing well. I think Google's pretty bad too. Not as bad as that. That one's kind of leading down, but you know, this one's below. Amazon. I think Apple's the only one that's really holding up. Maybe Netflix too. But same thing, you know, this one broke above and then, you know, this may be leading, but I'm not sure. You know, broke below the level. God knows when this happened previously. It's had a few. You know, 08 back here when it was a dollar stock, but yeah, broke through, you know, popped back above and then, you know, made new lows. So I don't know if that's harbinger for things to come, but you know, could be. You know, a lot of these are getting hit pretty hard. I think Apple's doing a little better. Yeah, they're still well above here, for at least for the time being. So, all right. I think that's it. Yeah, that's it. Open up to questions, comments. Dave, feel free. You can chime in anytime. You don't have to limit yourself.
Thanks. I think I already said my piece. I have to wait and
Okay.
see now for what the Fed says.
Yeah. Yeah, this is a very, I think, important meeting about, you know, I don't think there's too many people that are, you know, they put out too much messaging on, you know, December so far. So, you know, see how they react. I mean, we had that rate reading that was terrible. The market tanked and then reversed, like had a huge reversal, you know, after bad numbers. So, you know, I was telling Joe, you know, the September Fed meeting where, you know, he's like, oh, we're going to do everything to battle inflation. You know, since then, the market's only down like 1%, you know, the Dow or something. So I don't know if they're buying it, you know. This seems like, you know, there's all these carrots about pivot and then it doesn't come through, then the market, you know, goes bad. So we'll see if there's any kind of pivot, slowdown type thing in the language. I honestly don't think so. So, but that's my opinion. All right, thanks, Abe. Anyone else?
Yeah, Josh, it's Lee.
Hey, Lee.
Hey, this is a little drawn out. Maybe I should wait till after you do the summary of how the trades are. Yeah. So, well, my question is this: go back 2 years, everything had been working great. I was
Yeah.
making money, and then somehow things got off track, and I never understood why. But
Mhm.
you know, after I lost a little, then I just pulled back, and I have not been trading with, you know, what we talked about every week.
Right.
Now, as I'm listening to you discuss it, it seems like this time trades are going pretty well, and
Yeah.
which is a confidence builder.
Right.
It makes me want to get back in.
All right.
Here's my question. Is there a feeling or an understanding of what got broken, and is it fixed now so that I can have confidence and I can move forward? Do we know what caused those changes in, let's just say, our positive results?
I think, you know, a lot of it is just like you can see this is the earnings season. like pretty much here. We're on the same kind of slide here. In between the earnings or, kind of tail end, things turned over. This one, this would start earnings and then kind of through here. So this one, obviously wasn't a good quarter. So, I mean, this one was a spectacular quarter. Like so far, this quarter's been pretty friggin' strong. So really it's about this. I mean, even in like a bear market, we're getting the run-ups pretty much right during, the earnings season type thing, the bulk of it. So I think that's kind of, kind of key, thing to watch. I don't, I've taken over the earnings, so, there was a few issues before that, but, I think that's kind of the big thing was, okay, where's the market? A lot of these, we go back, like this was, no, not that one. See, like this was, okay, so here, I mean, this is the beginning, we put out like March 15th or something, we put out the earnings plan, and it just roared higher, so it's, you can just do that every 3 months, and look at like June 15th, and then, it really, I think that's a big part of it, like in here, 9/15, you can see it just tanked right here for that like month. So that was like that was bad earnings. So, I think that they do pretty well, sideways, but, I mean, if we get like a tank, which is pretty rare, for the earnings, I think that's kind of the key. And, we kind of narrowed down the list too. So, we don't have a ton of trades, they have to be, they have to test really well now, to qualify. So, I think that, a couple of factors.
So as we move forward, we
Mhm.
look to see if we're in a sideways market or a up market. That's a good sign.
Mhm.
Down market, not so much. And then, what was that second?
Oh, just, the back testing, so
Oh,
like,
right.
yeah, so we've refined the criteria, excuse me, for, all these trades. So now we're looking for like 50% and, they have to win, over 90, cost factor over 8. So there's a lot more, and, we're pulling out these big trades, so it's kind of level risk. So
Right.
that's gonna make the results a lot more, useful, whereas, if you get CMG right or wrong, that's pretty much how your earnings season goes, so.
Yeah.
um,
Yeah.
Yeah, so that's kind of the big things, I think.
Okay. Thank you very much. Can
Yeah,
I,
but
can I
like
throw
when
in
we
one?
put out the plan, just kind of, see where the market, like, okay, earnings are starting, that type of thing. It's like, all right, which way are we going?
Right, right. One more quick question. You talk about war in Ukraine. What,
Mhm.
did you hear anything about Iran threatening or an imminent situation against Saudi Arabia
Yeah,
or the US
yeah,
pipe?
yeah, there was a news story about that.
Yeah,
So,
and what are your feelings?
oh, I didn't give it much thought. I don't know why would Iran attack Saudi Arabia? I don't know. I could see them attacking US interests or something in Saudi Arabia. Yeah, but I don't see them actually attacking Saudi Arabia. So I don't know. I mean, the biggest concern with Iran is like a dirty bomb type, scenario. That would be my biggest Iran concern.
Right, right. Okay, thanks.
Mhm.
This is Dave. I want to comment just on that for a second. Could it be just because they're both major OPEC participants and it's like just oil versus oil kind of thing? Well, I can limit the Saudi supply or the Iran supply, which is being sanctioned right now by the US, might have more value.
Yeah, but I mean, they've been sanctioned forever. I don't know why they, do something to Saudi Arabia. They would, the blowback for, that would be huge. If they attack the US, everyone expects that, like they hate us, right? But Saudi Arabia is just like, well, okay, that wouldn't be good. I don't think, it would be in their best interest to do something like that. I could see him doing something dirty, like, letting off a dirty bomb or whatever that can't really be traced back to him. I could see him doing that, but I don't think like an outright attack, in Saudi that would be big trouble for them.
Yeah, that news came out just after they slapped Biden in the face for asking them to hike their oil or not cut their oil supply, which they did. And then Biden threatened, I think, to pull back support for Saudi Arabia. I see that's what Saudi Arabia is just trying. Oh, don't do that kind of thing.
Yeah. Yeah. I mean, I'd be real shocked if they went after like Saudi assets. I would be really shocked. So, okay. Yeah, good questions. Anyone else before we run through earnings real quick?
Yeah, Josh, this is Russ.
Russ.
Going back on your filtering of the earnings, is there a
Yeah.
reason why you choose 7 out of the 10 back rather than 8 out of 10? So that's like saying 70% of the time it's going to fall in, but you got 30% it's losing, but yet you're choosing 80, 90% of the wins for the high win. So why not choose 8 out of 10 versus 7 out of 10?
Oh, as far as like the screening,
Correct.
yeah, I mean, I could do that. I mean, you could move back to 7, but I don't know. This is, how I've been doing it. I don't think you'd get too many 90% winners at 7, but you could have a few more added in.
Well, no, you're using 7 out of 10 rise at the past 10 quarters, and
Yeah.
why not use 8 out of 10? And then you further filter in a 80 or 90% win.
Right. Yeah, because I mean, even if you get sideways, it could be a winner, for that 7 out of 10. Like if you get a couple sideways, they could still be winners for the type of trade we're doing. But I wanted it more inclusive, so you get a bigger list to test.
Okay.
Yeah. All right, let's take a look at earnings. So I pulled up non-movers. So these ones are going pretty well. 2 closed out. All 4 of these are up. Got in 25th. So this one expires Friday. These ones are a little further out based on expirations, but they've all done pretty well so far with 2 closed out as winners. So these are doing well. Yep.
Josh, Con and Region is going in today. How would that look if you set that up right now?
Which ones?
CON?
TON?
No, CON. Con.
Con?
COP, I'm sorry.
Oh, ConocoPhillips.
Right, and then also REGN.
Yeah. So, the alerts come out at 3 o'clock, but, basically you're gonna like right around 3, and that's plenty of time at 3. you basically use this to go as your midpoint. And, if you want to do like pre-game on it, you can pull up the options chain for COP. Let me close these things out. So COP. So if we're gonna do what next week's, then we got expected move of 7-ish. So you look at 128. So you could, you're basically gonna do let's just say it's 128, so 7-point difference. So we're selling here. We're buying this put, and then 135, then we're buying this one. So buy, sell, 2 sells, right? So that you can kind of figure out, and you can do this obviously in your order system and look at it. It would kind of, it really depends on the price. So if it's moving a lot during the day, you kind of want to push it a little later. I don't think this one's moved much. So 127. So it's pretty much flat for the day. So you could probably plan on that 128. I mean, you can always sway it a little if you think it's going to be bullish. I don't know if Joe is going to share those charts, but you can look at how the other oil companies have reported. So that's how I'd structure it, and you can set it up in your costs or whatever, and kind of monitor it through the day. You sell this call, buy this call, and you just kind of use that like 7 there, and see what the risk reward is throughout the day, and then pull the trigger before the close.
Okay, but the IV isn't really that high.
Yeah, this isn't a vol crush. This is non-mover, so this one goes more towards staying within the band, that type of thing. So it typically wouldn't move a lot. It wouldn't move outside of that 7 typically.
Say, Josh, this is Dave.
So you can see here. Like these are all the percentage moves, so pretty small moves typically. Exxon reported, right?
They did.
Did they have a huge move or what? I
Don't
don't remember. I don't follow.
I don't remember the number. I just know they reported.
Yeah, same way. Yeah. So that's the whole analysis behind it. It's not a big IB thing. I mean, if you have like elevated IV, then great. But if you're real confident, I mean, you can do this Friday. Now, obviously, higher risk, higher reward type thing. So
Yeah,
So
well, you
make-
had the.
go ahead.
I was just going to say, while you're discussing the concept, any chart is probably okay to look at. But one thing, I actually did Qualcomm today because it was, I think the report was it's the second highest elevated IV in history, kind of like thing. So
Oh, wow.
I said, oh, I'll do that one then. I was looking at the Iron Condor, and so I put it on a trade. It got accepted. I think it was about a 3-to-1 risk reward, risk 130 to make 3
Good.
or something. If I don't know, something like that. Anyway, whatever it was, it was. But I put it on wrong, and I did all puts. I was a little biased to the downside slightly.
Yeah,
And I didn't use the same strike for my short strike. I gave a little bit of a, landing zone or cushion. I think, let's see, it was like $3 wide. So there was $1 strike. So it was a $3, gap between the short put and the short call.
mhm,
But it was a little skewed to the downside. And I put it on by accident and it got filled all on the put side. So it was, then I went
Mhm.
around and did the same thing as an iron condor.
mhm.
Same strikes exactly. So the risk graph looks pretty much the same, except for one's a debit. So the risk reward's the same. One's a debit, one's a credit. So one's a credit you're trying to keep with the iron condor, and one's a debit you're trying to, exceed with the regular condor, or all one style option,
Right.
all puts or all calls.
Mhm.
And after I did that, I wondered, well, what's the impact going to be? It's almost the same risk reward. Just like I said, it's up to the penny. It's almost the same. How's that going to react after earnings? I don't know whether you can, either you or Joe, got any, thought about that, but we'll see. I just thought it was pretty interesting, and I'll be real interesting just to watch that one trade to see how it performs, if it performs exactly the same on both sides. Now, our ball crushes are all iron condors, so I was wondering, I wonder what the difference would be if we switched it to all the same style, either all puts or all calls.
Hmm. I
Just
would think
wondering.
it'd be similar.
I do too. And I'm saying I'm pleading ignorance.
Yeah.
Underlying. Anyway, we'll see. But
Michael, yeah, well, let us know.
yeah, to the point is there are some really intense IBs out there too. So they're out there.
Yeah. Well, this one isn't one of them.
Right.
Um, Okay, vol rise are doing this is our big loser here. Vol rise are not doing well. I think there's two that close out with loss, so these are just, we're not getting the vol rise this quarter so far. So the bullish pre-runners have done fantastic. And it's just these nice run-ups are well timed. TSEM, so we had 16 closed trades already. I don't think, I think everyone except for one, this closed out before earnings, but everything else hit their target. So 15 targets. Then you got, one that closed barely. Then you got two active right now with, this earnings. I think this will close out today, and then the next one, last one, TSCM. So these ones are doing great.
Yeah, you
last-
see, Josh, it's
Yeah.
me again.
Yeah.
Sorry to jump in, but I want to participate in that stuff.
Yeah,
Don't we all? And
yeah. Well, it's a lot harder in like bear markets,
but it's doing very well in a bear market, isn't it?
Yeah. Well, just because, like I showed, I mean, the earnings season, it's running up, then it like turns over, but yeah, it's been doing well.
Okay, thank you.
Yeah. The bullish runners are doing, well. All these closed out for profit targets. You got 12 opens, couple that are down. But overall, still same thing. So you got 3 out of the 12 that are down currently. But that could all change. I think market's down today. So anyway, they're doing pretty well. Outside of vol rise, not sure what happened there. It did really well last quarter. So everything else good except for vol rise. So all right, this took up 50 minutes, Joe. Give you some time here, right?
Covering a lot, Josh, as
Yeah.
always, doing a hell of a job, and
Oh.
appreciate the feedback from everybody.
Yeah, great questions, guys.
We got Fed coming up. I just really was going to pull up the free charts, and see where we are. As far as the rally back, and as I said, SPX and Nasdaq have rallied 12%. No, excuse me. Yeah, SPX and Nasdaq have rallied 12% off the lows. Russell's rallied 14%. All have gotten to some retracements that are way back up. We're at 50% in SPX. No real crystal clear wave count at all, but there we are at 50%. Right around 3,900, and it's interesting, Josh, between some of the levels with the trend lines you draw with state target numbers, and then the fibs. There are a lot of numbers that are coincidental. Russell been the strength of the three, still a little ways off the 5/8 retracement, but as you pointed out, we've had that double low, in the June-October period, so been kind of going sideways, with these fair market rallies that tear your face off. I forget who said that last week, whether it was Lee or Dave or somebody, but that is typically how these fair market rallies happen. So a little stronger in the Russell, in terms of NDX, as you'd expect. We just bounced up to that 3/8 retracement, and whether that's going to hold as resistance, time will tell. One thing, we get into tomorrow's afternoon close, we then turn around and do have non-farm payroll Friday morning. And that obviously is speaking to the heart of employment. So it'll be interesting to see how much volatility we get in the markets over the next 48 hours or so. Looking forward to hearing what Powell. That press conference typically starts at 2:30, right, Josh?
Right.
Yeah, so I think, a lot of you on the call listen to that. I mentioned before, I think it's really insightful. Although the last one I didn't find to be, to have many tidbits of information where, 2 meetings ago, I thought had lots of insights. And then just kind of getting back to the state modeling, Josh and Ashok have both told, because I'm always fishing around for overall direction in the market and hints to that. And I truly do believe we have, some real gold in this state modeling. Josh and I are starting the process, and I think Josh maybe had scratched the surface some time ago about rating state modeling, for the individual issues. And we're just getting started with that, because I think we all know that sometimes, we get state 8s and it's a bottom, we get state 1s and it's a top. So just to kind of come up with some kind of rating system. But as Josh mentioned earlier, that transition now from 7 to 5s, and Ashok mentioned this earlier this morning on a call between the three of us, that's really critical to get some confidence whether this market's going to have some legs, and whether, the forward-looking market has now saying that this June, October 13th period, we've put in a low. Who knows? Again, I always think, it's driven by earnings, but, that transition going forward, we're up to, in the course of 7 trading days. Yeah, in 7 trading days, we went from a green pie, in the market pulse, almost doubled from 30% to just shy of 60. And the vast majority of that are state 7 transitions. And so, okay, yeah, we see the markets kind of moving up out of the September 30th, October 13th lows, but is it a meaningful bottom? And, just keeping an eye out for this transition to state 5 is going to be important over the next, week or so. So that's all I wanted to add. Looking forward to what the Fed has to say in 5 minutes and then 35 minutes.
Right.
Thanks to everybody.
Hey, Joe, what's
Dave.
your view on how earnings turned out or are turning out? Because they're not all done yet.
Well, they've been, and back to Lee's point and Josh's point, where we've had some pretty good rallies coming into earnings. We all know how Wall Street walks down expectations. Historically, I think over the last, I'm not sure exactly how many quarters, but a good number. It's, I think 67% have been beating last I read, which was probably Monday. We're in the low 70s for beats this quarter. You know, that one link that I think we posted, the last update was Monday on the S&P 500, and I think it was 73% of them have beaten. So if anything, we're exceeding the historical norm, Dave. And, you know,
Okay, but
so-
I'm talking about aggregate earnings from quarter to quarter to quarter, regardless of what expectations are the earnings less than they were last quarter or more than they were last quarter?
Pretty sure they're more. And I'm talking S&P 500.
Yeah.
I think they're, you know, going from $51 for the quarter to maybe 57. If I'm wrong on that, I'll get it out there, but you know, higher is my understanding.
Okay, thanks. Pricing
Yep.
power, I'm guessing, is the reason for anything higher.
Makes sense.
Yeah, we didn't send out that,
The link?
yeah.
Okay.
Huh?
And I'm also
I
going to
think the
listen to
last-
see if they say anything about it, like Josh has been tracking the bond buyback thing or not buying back or roll off. That's what I'm watching out for today. I think he might say more interesting things about that than what they're going to do in December.
Very true. And that's important for the market, obviously. But Josh, yeah, if we haven't sent that out, we can put that in the chat or in the, you know, thanks for joining email at the end of the day.
Okay, yeah, I don't know where the link is for that. You send me
track
the
it down.
email. Yeah,
Right.
we could do that. I was trying to, I'm on their website. I can't find it. It's like a friggin' maze.
Yeah, it is.
So, okay, yeah, we'll add that with the email that we send out, so. All right, anyone else? Last call for questions, comments? All right, we'll close it up. Thank you all and see you next week.
Thank you, guys.
Have a good week, everybody.